Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I will be showing you my portfolio as it's crossed a monumental milestone, and I felt I wanted to share that with you all. As you can see on your screens, the portfolio has surpassed the £40,000 mark. I wasn't sure if I'd hit this before the new tax year, as my ISA allowance is close to being maxed out. But with a good green day today, as you can see, I'm up over £200. It has meant that my portfolio, for now, has crossed that £40,000 mark. And as you can see here, my ISA allowance, I do have £1,600 left, but I have invested £1,200 over on my Invest Engine portfolio, so I've got to deduct that from my overall £20,000 limit, as across all of your ISA accounts, it's £20,000 max. That is not per account. So if you take away that £1,200 from this number here, it leaves me with around about £400 left to invest in here to max out my ISA, and that is before April. So as you can see, we're coming towards the end of February here, so we have just over a month or so left. So I'm going to try and aim to put in around £100 per week up until the final part before the ISA allowance will renew in the start of April, and I'm very much looking forward to that, so then I can start pumping in a little bit more money into this portfolio and continue to see it grow. So in today's video, I will take you through the entire portfolio, show you all of my positions and how they are performing and how the markets have been today, as I love this new feature on Trading 212. If I am to scroll down right now, I can show you my asset allocation. It's a really nice little image it shows you here. These are all the different stocks in my portfolio, so it actually shows every single stock I currently own and the ETFs, and then it shows you how they are performing today. So you can see majority are in the green, with some big green movers today, with my two main ETFs being up over 1%. We've got Louis Vuitton over 3% and SafeStar Holdings over 1.5% as well. So some good movers, which is why my portfolio has crossed that £40,000 mark. And each of the positions on here, you can see they're all different sizes, and that is the size that they correlate to in my portfolio. Obviously, VUSA being my biggest position, and then you've got JGGI, my second biggest position, and then you can see sort of these three here are all similar sizes, and so on and so forth. Now, if you have spotted down the bottom, there is a little stock down here called Greggs, which I have just added to my portfolio. If you didn't watch my recent video on the 3 best stocks to potentially buy if you're a dividend focused investor in the month of March, then I do have Greggs in there and my reasons behind this, so please check that out. But I did buy into this stock just the other day, and we can see already I'm up a little bit on the position, kind of hoping it actually dips back down to around that £21 mark, as I will be happy to add a little bit more there as well, so I can start to build this up a little bit. But for now, it is a new position in the portfolio, and it will be eventually added into my UK growth dividend stock portfolio, as that is what it is part of. And if I take you through all of my 3 different pies right now, my biggest pie right now is my US growth dividend stock pie. This one is performing the best out of all of them so far as well. So you can see every single stock in here is actually in the green. I did recently just sell out of my Nike position. The reason for this was I had a set target at $80 for when I wanted to sell out, and it surpassed that surprisingly just the other day, as it had a massive green day being up over 5%. So I felt like I wanted to sell out of my Nike position. I made over £100 on that position, and I wanted to reallocate that capital into some ETFs and some other stocks, which is exactly what I did. So I was very happy with that. But apart from that, all of the stocks will be the exact same as you'll have seen recently in my most recent monthly update video. We can see Visa performing the best alongside Starbucks, both being up over 34%. And then we've got some other big winners with the likes of MasterCard up 23%, Louis Vuitton now up close to 15%, and we've got Johnson & Johnson, which has performed really well, being up now 12%. I was buying into this at around about, I think, the $150 mark. Yep, my average cost actually $146. So to see it now up at $165 is a great sign and shows my stock picking has been very good for my US growth dividend stocks. Moving on to my ETF and chill pie, this now just has 2 ETFs in here, we have the Vanguard S&P 500 up over 10% currently. And then we have the newer one, which is my JP Morgan Global Growth and Income. This one's had a great stock performance over the last 5 years, being up over 100% overall. And it's actually outperformed the S&P slightly when including the dividends over that period. I know over the long term, it may not outperform, but for me personally, I very much am very motivated from dividend-focused stocks and ETFs, and this one pays a massive 3.5% yield and also has a fairly decent growth rate as well. So it is one that I am very much happy to buy into, and by adding into this stock every single week, like my Vanguard S&P 500 fund, when I update my predicted annual dividend income, it really helps motivate me as it continues to increase at a steady rate, with this one paying a fairly good dividend yield. So they are the two ETFs that I'm very much focused on investing into. We can see that I've got a good 60-40 split between the two of these within this pie, and I also want to have around about 35 to 40% of my overall portfolio being in ETFs. It was actually just below 30% around Christmas time, and as you can see now, it's close to £13,000, so it's closing on being around about a third of my portfolio. So I'm really closing on that 35% mark, which I'll be very happy to hit, and that's my goal over this next year, is to just continue to add into these two positions on a weekly basis, and then when I see a dip within these two positions, I'll then allocate even more capital into them. Finally, we've got our UK growth dividend stock pie, and if I show you this one, overall we're up slightly when you include the dividend payments I have received, but disappointingly the actual stocks themselves are slightly down as of right now. We can see the ones that are in the green and the ones that are in the red, and the main reason this one's down is, yes, there's only 3 stocks in the red, but they are 3 of the bigger positions. Safestore Holdings being around 15% of the portfolio, you've got Greencoat UK Wind at around 17%, and then Diageo sitting at around about 13%. Diageo being the worst out of the 3, being down nearly 20% on the position, which is very disappointing, and it is a stock that I do regret buying. But with the other 2 stocks, I am still bullish over the long term. I'm very happy to just continue holding these stocks and receiving the dividends from them. I'm very happy with my positions now, and I believe Diageo is pretty much the only position in my entire portfolio that once it is close to being level, I would be happy to sell off. Every other position I do see as long-term plays now, and I'm very much happy to hold onto these positions and continue adding to them. The goal over the next few months is to just continue adding into the portfolio. Obviously, when the ISA allowance resets in April, I'll hopefully be able to allocate a little bit more capital to the portfolio, and by the end of 2025, I'm hoping to have hit that magical £50,000 portfolio mark. So we'll have to see how we get on throughout this year, but if I was to able to get this portfolio up another £10,000, that would be absolutely amazing, and I'd be so happy to hit that by the end of this year. But as I've already mentioned, overall, the portfolio, I'm just really happy with all of my stocks now. I think I've got a great dividend yield overall. My portfolio sits at around about that 3.5% yield mark, and my yield on cost is around about 3.8% now, which is slightly higher than that actual yield. So that's great to see, and I'm hoping to keep that dividend yield around about the 3 to 4% mark, as that is where I think the sweet spot is between getting good growth stocks, but also having some companies that pay a good dividend yield. As you know, I am a dividend focused investor, but I am a dividend growth investor. So growth being a very key word there, as I am looking for dividends that are paid sustainable over the long term and that are growing at a good rate, so that it's going to beat inflation, and over the long term, I'll potentially be able to live off of my dividend portfolio. So that is all for today's video. Like I say, I'm so happy to cross that £40,000 mark within my first 18 months of investing. Hopefully by the end of this year, I will be able to cross the magical halfway to £100,000. It's crazy to actually say it, considering I only started investing under 18 months ago. But if I'm able to hit that £50,000 mark by the end of this year, then my portfolio is well and truly on the way to helping me become financially free. And I hope these videos are inspiring and motivating you to also get investing in a portfolio. Open up a stocks and shares ISA. It's all tax-free within here. Make sure you take advantage of that being a UK resident, and really try and max out your limit every year, or put in as much as you can on a yearly basis to get the most out of it. Thanks for watching today's video. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Please share your thoughts in the comment section down below, and let me know how much your portfolio is currently valued at. As you can see on this graph here, overall now we are up over £4,500 with a 28% rate of return. Until next time, keep compounding and stay patient in the market, because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.